Hey folks, welcome to the morning market briefing. It's Wednesday, March 2nd, 2022. Hope you're doing well. Lots to talk about today. We're going to open up talking with Ben and Tom, getting their thoughts on State of the Union. We'll do an update on Russia. We'll talk a little bit about energy prices and preview some of the testimony coming from Fed Chair Jay Powell. So busy show. Going to jump in. Ben, want to throw it to you to start us off, and then I'll get thoughts from Tom. We had Joe Biden's State of the Union address last night, went about an hour and 2 minutes long. What was your overall impression? And then we can hit some of these high points and specific themes.
Overall, I actually thought it was fairly positive. It was less partisan than some of the previous State of the Union addresses that I've heard, especially if I think back to kind of between 2008 and 2016. I thought that, and we had the interesting talk beforehand, I think there were really a few subjects. I thought he was pretty solid on Ukraine as long as you don't look too closely. And you know, I thought that was pretty solid. I thought he was relatively soft on the economy, particularly flimsy on inflation. I think that he deserves credit for having some humility on the COVID situation and seeing the writing on the wall on that front. And I thought that it was a fairly good, if somewhat toothless approach to the unity agenda, which he rolled out in the last 5 minutes or so of the speech. So at a high level, I thought he was fairly good. Positive contrast, tacked toward the middle of the political spectrum, which I view as positive longer term. And that's what I thought of the speech.
Tom, high level, what you got?
Yeah, I tend to agree with Ben. I think that it was a lot more solid than I thought it was going to be. I thought he did a good job getting through it, not being known for being a great public speaker. The big takeaways I thought were sort of there was a little bit of a disingenuous, victory lap on jobs. I think anybody who looks at the numbers every day like we do, and we'll talk about the jobs number that came out this morning later in the call, that, we have not gotten back to where we were pre-pandemic. So, it's pretty classic to take a victory lap on getting back jobs that were all lost 5 minutes before you took office. I think that was the only part that I really had took any umbrage with it. Otherwise, I thought it was a very positive speech. I thought, it was very centrist. It kind of moved away from some of the hardline topics that we've seen in the past, the defund the police stuff. I think that there's definitely positive stuff with the burn pit, Gulf War talk. There's been a lot of talk about Gulf War syndrome and a lot of the effects of that, and getting that pushed through at the highest levels and getting guys taken care of that were serving overseas. I think that's a positive thing. But overall, I thought it was good. I thought it was a fine speech. I don't think anything, really moved the needle, but I also thought that it wasn't, it wasn't a disaster, which I think a lot of people were anticipating.
Yeah, I thought it was interesting. I would echo what you guys said. I think this is, Biden, for all his characteristics, I don't think anybody would necessarily say he's an incredible orator. He's not a guy that is probably incredibly comfortable speaking for a prolonged period. I appreciated, frankly, the relative brevity of it. We've seen some really long State of the Union addresses if you go back to the Trump years, the Obama years. The fact that it was kind of in and out in about an hour, I thought was pretty favorable. I thought the Ukraine subject was a little bit of a premature victory lap. I think if you did not know what was going on with the Russia-Ukraine situation, which we'll certainly have a bit of an update on in a little bit, it seemed a little bit self-congratulatory, kind of, a general tone of we knew this was going to happen and Russia is the bad guys and democracy will win. I don't say that to second guess what he's done. We said this a lot on the call. I don't know that I have a huge problem or any problem at all with how the U.S. has handled the Russia-Ukraine situation. I'm very thankful that we're not, sending troops directly into Ukraine to fight. I think the sanction things have played out how I thought they would, but the messaging's been a little questionable at times. So I thought Ukraine was a little bit of a softer note opening up, but we saw him moderate. I think that's the biggest takeaway. What's interesting to me, I was thinking about this morning. If you go back about a year in time on this call, I'm pretty sure we were talking about just the misguided nature of the Democratic agenda, given their control of the Senate, of the House, and of the executive branch. And typically, when people are elected to president, they tend to moderate relatively quickly. They run on one end of the extreme in terms of their platform, and then they move towards the middle. It felt a little bit like maybe we just had this on a 1-year delay. I mean, I texted you guys last night. It felt like this would have been outside of a few circumstantial things like Ukraine. It felt like this was a speech he could have given last year. Some of the talking points were very similar to the Build Back Better plan. He just didn't name it the Build Back Better plan in last night's talk. But it seemed kind of like the speech you would expect earlier on. And maybe they're trying to make a more concerted effort. They probably have to be based on polling numbers and midterms coming up. They probably have to move into the middle and broaden their base a little bit as those elections are coming up. And from that standpoint, I think it was relatively strong. The COVID point's interesting. A lot of people are really ticked off that, 2 days ago, Biden was walking across the White House lawn by himself wearing a mask because masks were the science, and now all of a sudden they're not the science anymore. I get that. It might seem hypocritical, but I kind of echo Ben. It seemed a little bit like a tone of humility to actually change course on some of these COVID restrictions. And I think that's overall the positive. If you didn't like the mask thing, you can second guess the timing of when masks went away all you want. But I think the more important thing is that they went away and that we're getting a little bit closer back to normal. Speaking on specifics related to kind of the market, Ben, any major investing takeaways? I mean, you have it in the notes. I mean, the first thing they mentioned was really prescription drug pricing. I mean, I feel like that's in every State of the Union address, so every major political platform for anybody running for national office. And I just don't really know that moves the needle much for the average person. But what did you take away on the economic side, Ben?
Ultimately, I don't think there's much consequential on the economic side. I thought that there was an opportunity maybe to have a little bit of economic consequence in the near term, but you really can't do anything from this perspective. He is the executive branch, so he is in charge of, to an extent, regulation and executing the laws that are on the books. So how strictly he wants to execute those, or how loosely, is up to him. On the prescription drug side, it does look like our own Senator Raphael Warnock is coming out with a bill today on capping insulin prices at $35. But again, they always talk about prescription drugs. I don't think there's much consequential on that. On the energy side, I thought that the releasing of 60 million barrels, U.S. is releasing 30 million, and the rest of the world's releasing another 30 million, really doesn't do anything. Globally, we consume 100 million barrels of oil a day. So this is 0.6 days of oil production. Russia produces 10 million barrels a day, 10% of global oil production. So basically what we're saying here is that this is going to be 6 days of Russian oil production, or 0.6 days of global oil consumption. Meanwhile, we'll talk a little bit about this in a minute, but OPEC Plus is still sticking with its 400,000 per barrel a day monthly increase. So again, 0.4% of global oil production coming into the market every month. So again, that's not going to move anything. President Biden has been pushing the Saudis in terms of producing more, but right now OPEC is remaining fairly intransigent on that, and they're much more keeping in terms of their agreements with Russia, because the Saudis do have agreements with Russia in terms of oil production. On the energy side, I did think that he could announce incentives for new drilling in the United States. I thought that was highly unlikely, but it would have been a way to release some of the shackles on energy. We had the Devon Energy CEO out yesterday actually saying that, it's just kind of insulting to him that President Biden's going to the Saudis and asking them to drill more and hasn't asked Devon's CEO to drill more. And he says, it would be awesome. Even if I don't have an economic incentive, I just need cover, because right now, if I increase my capital spending budget and drill more wells, my shareholders are going to get mad at me. The communities are going to get mad at me because it's not environmentally friendly. So he wants a little bit more cover on that, and Biden did not give him that last night. On the corporation side, this is just something that's been a function of the administration over the last year, and that is really trying to clamp down on raising prices. They need a scapegoat for inflation. Corporations are an easy way to do that. And then I do think the end of COVID could help reopening plays. I think this could mark a bit of a change. I know here in the South, we've opened up largely masks and everything, but I was in California at San Jose Airport last week, and there was not a single restaurant open in the airport for sitting down. And it was a big airport, San Jose Airport. Many restaurants were closed, masks everywhere. There were people sitting down in the restaurant with masks on. They would take a sip and then put their mask back on. And I think that especially and these are high spending areas, if you're talking California, New York. And I think that this could release some of the shackles on those economies, which would help the U.S. economy overall. So continue to watch that. That's been going on for some time, but it could be accelerated by the State of the Union.
Yeah, and it seems, even just looking at market reaction, I mean, certainly the only headline is not the State of the Union in a period like this. You mentioned energy. I mean, oil has really ramped up even during his speech. I think people were really keying in on the amount of reserves that were going to be released. That number was, to your point, Ben, not all that impressive when we saw oil futures climb up. Crude oil futures now at $111 a barrel, quite high. But we are seeing some calm in the market after a volatile day yesterday, at least right now. I think it's going to be interesting to see how that holds and how that plays out. I think Russia is still, and their invasion of the Ukraine is still the dominant story as the market sees it. But, I don't think Biden tipped over the apple cart in any way in terms of people's thinking on the economic prospects. I think some of his points in terms of, like Tom said, the jobs gained, I think that rings a little bit hollow, but it kind of is what it is. Switching gears, let's get an update, Ben, on the Russia situation. I think the big takeaway for me is just the slowness of this progress in Kyiv. We've been talking about the long march to Kyiv, the massive trail of military personnel and equipment heading that way. A little bit surprising that we're still talking about Kyiv still standing, in my opinion. But we have seen a city in the south fall to Russia. Kharkiv is continuing to take massive hits. How do you kind of assess the situation right now, and where do you think we're going to see this play out over the next day or two?
Yeah, I think it's interesting. Right now, it seems like things are moving fairly slowly. Kharkiv, the massive shelling continues. It looks like a smaller city, Kherson, has fallen to the Russians. It's in the south, kind of close to Crimea. I'm frankly kind of surprised it took this long. Kyiv, the slow progress continues. Again, lack of fuel, food, morale. But again, it seems like things are moving there slowly and painfully. Interestingly, Russia and Ukraine do have a second round of talks today. Those same delegations, you don't have Zelensky and you don't have Putin there, but you do have negotiations continuing today. So we'll have to see what happens with that. I'm also interested to see corporations in the U.S. really taking a stand on it. Apple, Nike, and Boeing have all halted sales, and importantly, Boeing has also halted servicing of aircraft in Russia, which may start to hit some of the Russian people and make them more against the current conflict in Ukraine. I do wonder to an extent if some of these oil companies that are leaving Russia are basically giving assets to Russia, because it's great that BP's taking a stand and leaving. It's great that Chevron's taking a stand and leaving, and some of these other companies. But when you leave a Russian asset and you have a 20% stake in this Russian asset, you've basically you've given that asset back to Russia for free, which is kind of a win for Russia to an extent. I know there's bigger things going on, but it is interesting to see that. And I'm curious to see how that ends up playing out, especially once we get through the conflict and if there's any chance for remuneration for those companies. But that's where we stand on Russia. But the big focus today will be on those negotiations between Ukraine and Russia delegations.
Thanks, Ben. Yeah, and I think the biggest story within the market as it relates to the conflict remains the energy situation. I mean, the Middle East has essentially refused to play ball. OPEC is barely raising production, going up less than 500,000 barrels a day, 400,000 is the number. Saudi Arabia has basically said, no, we're not going to pump more oil. The UAE has essentially abstained from the UN Security Council resolution to condemn Russia. Israel has not supported the Ukrainians with their request for weapons and military equipment. The Middle East is just, I don't know, it almost feels like the Middle East is kind of happy to be uninvolved with the conflict for the time being. If you think back over the last several decades, to see something major on the geopolitical scale that's dominating world headlines, it seems like they're just kind of throwing up their hands and saying, yeah, we're not involved. Ben, what could give us a reprieve on oil pricing?
I think some resolution to the conflict. I think it's interesting that the main areas of tension in terms of the oil markets are really in the front month. So when you have oil contracts, I can buy oil for the April contract, or I can buy oil in the September contract, or I can buy oil for next April. And so I lock in that price today. And it's interesting, the April contract is extremely expensive. The September contract is significantly less expensive. And next year's April contract is even less expensive. It's a market term called backwardation. And we have extremely steep backwardation right now, which means that right now people are really struggling to get oil and they're willing to pay a lot for it. But if you look out to next April, if I want to lock in prices for next April, I can actually get a pretty good price right now because this is very geopolitical. And so that's something to keep in mind going forward, because usually you'd think that you might have an upward sloping curve because inflation, you'd think that if I can lock in a price now, I might want to lock in a higher price for next year, but it's significantly lower right now. So I think that's an interesting market dynamic to watch. So I think time could move oil prices lower, more US production, but again, that doesn't look so likely, could move oil prices lower. And then if the Middle East does kind of come to an agreement here to pump more oil, I think that could move prices of oil. But right now, I don't see a very high likelihood of that happening because these higher oil prices, all these Middle East oil players, they love these high oil prices. So they're not going to do anything to take the oil prices down.
Good deal. Ben, want to tee it up to you and then we'll go straight to Tom. But we do have ADP employment data that came in today. We've seen some pretty wonky stuff over the last couple months from ADP. What are we looking at? What do we learn? Any revisions that are significant, in your opinion, that kind of support the broader narrative that we've seen over the last couple months?
Yeah, I think ADP is really not on it right now. I mean, they reported a loss of 301,000 jobs last month. That was revised to an increase of 509,000 jobs. So that's almost 1 million employment increase, which makes me really doubt their numbers. So they came in at 475,000, which was a strong number this time around. So that's good. What's interesting, if you look at through the data though, they actually reported an increase of 528,000 among large companies defined as companies that employ more than 1,000 people. And so that increased 528,000. Small companies, less than 20 people, that lost 95,000 jobs. Small businesses are really struggling right now as employees either move to larger companies or leave, or the businesses are just struggling. But at the end of the day, the read is clear. Small businesses are struggling to pay these higher wages for employees. And this inflation is really hitting them a lot harder than these large companies. Large companies are doing fine. Small businesses are kind of losing.
Tom, we hear from Jay Powell today. Obviously, tons going on in the world. What do you think the messaging is going to be like? What are his priorities?
Yeah, there are a lot of headlines coming out, and we compiled a handful of them just that have come out this morning. My expectation is that they're going to say what they've been saying is that they're going to raise rates exactly one time. But there's been a lot of chatter this morning. I've seen tweets about potential runoff of the balance sheet. Some of the ones we've got just written down before the call here. Powell says wages are rising fastest pace in many years. Powell says price increases are spreading to broader range of goods. But the Fed expects inflation to diminish this year. I'm not sure exactly how that's going to happen. On the flip side, also some chatter coming out says the Fed is attentive to the risk of higher inflation, which goes in the stark contrast to the previous headline. So there's just a lot of muddiness out there today. So really, the goal is to get a clear message from Powell. I think what it's going to be is exactly what it has been, which is that they're committed to raising exactly one time, and that they're going to adjust accordingly. And I think the situation in Ukraine is going to inform that, because for those of you who are on the call earlier in the year, that ADP was real surprised at the downside, and then the following jobs report that came out was exactly the opposite. We had that surprise, excellent jobs report at the beginning of February, that basically counteracted the negativity that came out of the ADP report. And so, we're seeing a little bit of sell-off on bonds on that number, though I would not take it as seriously as other pieces of input for the Fed. But I mean, we saw the probability of a hike drop below one hike in March yesterday as the market fell. And so I think there's definitely some movement in the opposite direction from where we were. Because, I mean, if you look back to the beginning or the middle of February, when JP Morgan said there could be as many as 9 rate hikes, from that moment, we've basically seen a collapse in the number of rate hikes that we'll potentially see. And so right now we're looking at 1 probably in March, 5 total for the year, which is down from 2 and 6 just a couple weeks ago. So we really just need the Fed to say what they're going to do and then do exactly what they said. Otherwise, I think we're in for a little bit of a roller coaster. But as long as they stick to the script and continue to go with their consistent messaging, I think we'll be just fine.
Good deal. We will we'll certainly report back on that tomorrow. We're going to wrap it up there. Hope you guys have a great Wednesday, and we'll talk to you tomorrow morning at 8:30.